Okay, hello everyone, I'm James Hart and welcome to this Orbex Trader Education session where we're going to be talking about Fibonacci analysis and Fibonacci trading techniques. Now, Fibonacci analysis is one of the most interesting areas of technical analysis I find personally due to the versatile way in which we can use Fibonacci analysis to highlight really specific levels. So before we move on to looking at how we can use Fibonacci analysis in our trading, let's first of all make sure that everyone knows exactly what Fibonacci analysis is. So Fibonacci analysis refers to using a set of tools which comes as part of the MT4 platform, and it uses mathematical principles which underpin the Fibonacci number sequence to highlight key market levels. So the tools do this by applying the Fibonacci ratios as they measure price swings. So as I say, we're going to talk through then how we can use the different elements of Fibonacci analysis and some different trading techniques and trading setups that you can incorporate into your own chart work. And as ever, if you have any questions during the session, please just write them in the chat function and I'll stop periodically as we go along, and then we'll also have some time at the end. The mic asked, is the recording available later? Yeah, the recording will be mailed out to anyone who has subscribed to this, so don't worry if you can't stick around for the whole thing. Okay, so when we're talking about Fibonacci analysis then, we're really talking about using two sets of tools. These are the two main tools. We're talking about retracements and we're talking about extensions. So here we've got an example then of a Fibonacci retracement. And basically all we're doing with this tool is measuring a swing in price. So you can see here we have a bearish move. Price has moved from this high point down to this low point, and then we started to bounce here. And so as price is retracing against this bearish move, what we can do is apply our Fibonacci tool from the high to the low, and you can see that it plots these levels onto our charts for us. Okay. And now the key levels that we want to monitor, which again come as part of the Fibonacci tool, are the 38.2% retracement, the 50% retracement, the 61.8% retracement, the 78.6% and the 88.6% retracement. So these are the key levels to monitor as price is retracing against an initial move. And you can see here in this example straight away just how effective this tool can be in highlighting potential reversal points. So price has made this heavy initial sell-off. Okay, we've got this really sharp, strong sell-off. We've then got a quick retracement higher, and you can see that price traded up initially to that 38.2% retracement level, where sellers stepped in and drove price down. We then traded higher once again, this time traded up to the 50% retracement level, where we got that ultimate reversal lower. Okay, so this is just a really quick and easy demonstration of how you can use this tool in a really basic, straightforward way to highlight these specific market levels. And the beauty is these are levels which you wouldn't ordinarily come across, okay, because if you weren't using these Fibonacci tools, it would be very unlikely that you'd pick these same levels for any other reason. Okay, so using this Fibonacci tool is a really great way to pick these specific and quite unique potential turning points to gain entry to the market. So what we've looked at here then is a bearish retracement. Again, price has sold off from the high to the low, and as we're retracing higher, we simply apply our tool. This plots on the lines for us, and these are the potential turning points that we're monitoring. So in this example this time, what you can see is an example of a bullish retracement. So this time price has started at the low, it's traded all the way up to this high point here, and then as price has started to retrace lower, we can go ahead and draw in our retracement tool. Now this time, because we're tracking a bullish swing rather, a bit of a tongue twister there. Because we're tracking a bullish swing, what we do is apply our tool from the low of the swing to the high of the swing. Okay, so just remember, you apply the retracement tool in the direction of the initial price move. So because this is an initial bullish move, we apply the tool from the low to the high. And so as price is retracing against that move, you can see that we then have these key levels marked onto our charts, which we can monitor. And look again, once again, you can see a really great example of where these Fibonacci levels can pick out these turning points with incredible precision. So we've traded all the way down to the 50% retracement. We've touched it basically to the pip, and then we've reversed higher. So this is another fantastic example, again, of how these tools pick out these turning points based on these mathematical ratios which are used in the Fibonacci number sequence and are now integrated into these tools which come as part of your MT4 platform. Okay, so we've looked at retracements here where we're measuring a price swing and then highlighting levels within the swing. However, the other way in which we can use Fibonacci analysis is to identify extension levels. Okay, and so when we're using extension levels, what we're doing is measuring a price swing like this. However, instead of focusing on the levels which come inside the price swing as a retracement, we're focusing on levels that are projected above or below price depending on the move. Okay, so if we look at this example here, you can see that we've got an initial bearish price swing. Okay, so we've moved from the high to the low. Price has then started to retrace higher. Now, as we see that retracement happening, we can apply our tool, and you can see that there are levels projected below the price. And the key extension levels that we want to focus on are the 127 extension, the 161 extension, and then the 200 extension. Okay, so these are the key extension levels. So we're not focusing on these retracement levels within the price swing. Okay, so that would be a retracement level. What we're focusing on is these levels which are projected beyond the price swing. So we've measured an initial bearish price move from the high to the low. The tool has automatically plotted our levels onto the chart, and then look what happens again. So you can see price trades all the way down to the 127 extension. We get some change in order flow there, price bounces, but then look what happens. We move all the way down to that 161 extension, and from that point, we reverse and explode higher. So what I'm trying to show you with these examples is just how effective these tools can be in picking these market turning points. Okay, so the tools automatically draw these levels onto the charts, and so you already have levels that you can monitor. So you don't need to sit there scouring through the charts trying to work out which levels to be looking at. If you're basing your trading and your analysis on Fibonacci tools, then all you need to do is pick an initial price swing, measure it with the tool, and it will draw on the levels for you to monitor. However, it's very important to remember that the Fibonacci tools, they give us the levels to monitor, but they don't tell us exactly which levels will be the turning point. Okay, so the tool doesn't say its price is definitely going to reverse at the 50% or the 61.8%. All it does is highlight these high probability turning points, but it's then up to you to make the trading decision based on other elements. Okay, so depending on how you trade, this decision might be based on using trend lines or support and resistance. But essentially, what we're always looking to do when we use Fibonacci levels is to identify confluence in the market. Now, for any of you who have been in my other sessions, you'll know that confluence is something that I talk about a lot. And this simply refers to a scenario where we can identify two or more technical elements appearing in the same location. So when we're talking about identifying confluence with Fibonacci and other technical elements, what we're looking for is an area where a key Fibonacci level lines up with another key technical element, such as a structural support and resistance level, or a trend line, or a moving average, or whatever it is. We're basically looking to find coincidental technical elements to strengthen our conviction in trading a certain level. Okay, so if we go back and look at our retracement example then. Okay, so price is sold off from the high, traded down to the low. Imagine we're at this point in time here, so price is bouncing. We draw in our Fibonacci retracement tool, and that gives us our key levels to monitor. Now, once we have our Fibonacci levels drawn, what it then becomes a case of is searching to identify other technical elements present in the market which suggest that a certain level is likely to hold more than another. Okay, and so once we've drawn in that Fibonacci retracement, we then start to look for other factors in the market. And so as price is retracing higher, immediately we can identify two things. If we look over here to the left, you can see we have this high here. So this was the last high put in before we had that bullish move up into the top of this swing. So we can go ahead and mark in that high point there, because that's clearly a key point of resistance. And then you'll notice that just above it over here on the right, we have this low, okay? So you can see that we have this high here and this low here. So this area is clearly a very pivotal point for the market. We've seen a big reaction lower and we've seen a big reaction higher. So this area is very pivotal for the market. And you'll notice, of course, because I've marked it in red and we've got this blue highlight here, but this also holds a 50% retracement. And so immediately, as we've drawn in our Fibonacci retracement tool, we can look at this zone and say, okay, we've got the 50% Fibonacci retracement level lining up pretty much spot on with a very key pivotal level for the market. So this sort of 133.29 to 133.42, so around 15 pips worth of zone there where we've got this key resistance, key support, and now we've got the 50% Fibonacci retracement level. So we know that we have solid confluence there. So this is the process you need to be following when you're looking to identify these elements. It's a question of first applying the retracement tool and then looking at the other levels and seeing if we get any confluence with anything else. Now, if we were looking beyond that 50% retracement level then and looking to identify the next level that we would look at would be this one, the 61.8, because you can see we have this low point here. So we have this swing low, which caused a reaction higher, and we've got the 61.8% sitting right above it, sitting right at it rather. So if price gets a little sell-off from here, but then starts to trade higher again, this would be the next level we'd be looking at. And you can see in this example, the price did indeed trade up to that level, and we started to see some stalling and reversal there. So it really is quite a straightforward and simple process that you can follow then of applying these tools, these retracement tools, and then looking to identify other elements in the market which line up to give you confluence rather, and increase your conviction about trading a certain level. So we've got another example here then of where we can identify a different sort of technical element. So you can see here that we had this bullish trend line in play. We had two big touches at it here. We had a stall here. Price then broke down through that bullish trend line. We put in a new low here. And as we start to retrace higher, what we can do is draw in our Fibonacci retracement from this high down to this low. And then again, you can see that that 50% retracement level, which is one of the key Fibonacci levels to monitor, lines up basically perfectly with the underside of that broken bullish trend line. And remember, for those of you who have been in the trend lines webinar or are familiar with trend lines, the trend lines work pretty much in the same way as typical structural support and resistance. So once trend line support is broken, it tends to change to resistance if it's retested from the underside. And once a bearish trend line is broken, it tends to change to support if retested from the top side. So we've broken down through this bearish trend line, price has traded back up, and then at the section where price retests that broken trend line, we've also got confluence with that 50% retracement from the last swing down. So this is a really great example of identifying a different type of confluence, a different type of technical element as part of the confluence. So what I'm really trying to hammer home here basically is to get you to understand the process to follow when you're looking to identify the key Fibonacci levels to trade. Because again, the tools will highlight the key levels to monitor, but they won't tell you which levels to trade. That decision is up to you. And so really what you need to be looking to do is study the markets and identify these different technical elements in place, giving confluence with the key Fibonacci levels to help you decide which level to trade at. Now, in terms of deciding on a level to trade, a really fantastic method you can use is price action confirmation. Okay, and for those of you who've been in my other sessions, you'll know this is something I talk about quite a lot. And essentially, this is where once we've highlighted a potential trade location, we wait for reversal candles to give us the go-ahead to place a trade. Okay, so we're actually waiting for the candlesticks themselves to show us a reversal pattern or to give us an indication of a potential reversal before we place a trade. And so if no reversal candles present themselves, we simply don't take the trade. So let's look at an example of this. Okay, in this example, let me just check I've got the right slide. 1 second. Oh, sorry. This okay. This is another example of identifying confluence in the market. So you can see that we've got this bullish price swing. Price is retraced against that, and we've retested this former high. So this is another example then of identifying structural confluence between this former high and the key Fibonacci level. Okay, so just as we saw before, where we were looking at a bearish retracement in that last slide. So in the last slide, we had a bearish retracement. We're looking to sell. We've got confluence. This is just an example of bullish confluence in the market. So we've had our bullish price swing. Price is retraced lower against that initial move. And you can see that the 61.8% retracement lines up perfectly with that former high. And price trades down into that level, touches it to the pip, and then reverses higher. So that's another great example of identifying confluence in the market. Okay, so here we have the price action confirmation example that I was talking about. So you can see then, looking at this example, we're monitoring price as it trades back against this initial move lower, and we're looking to identify reversal candles at one of the key Fibonacci levels. Okay, so we're reversing higher from this low, we're trading higher, we've got these bullish candles, we trade up, and you can see, although we start to see some reaction around this level, we don't get any strong reversal candles. Okay, however, once we trade up to the 78.6% retracement level, you can see that we get this big bearish pin bar. Okay, so for those of you who are familiar with candlestick patterns, the pin bar is a really strong reversal candlestick which represents an acute shift in market sentiment. So what this really long tail is telling us is that buyers were in control initially, driving price higher. We got all the way up to this point here before sellers stepped in and drove price all the way down, and we closed right down in the very lower third or quarter even of the candle. So what we can see has happened here is that price has retraced all the way up to that 78.6% retracement level before sellers have stepped in and driven price down. Okay, and so once we identify that bearish candle at the side of a key Fibonacci level, this gives us confirmation to go ahead and take our trade. So in the same way that we've been looking for other technical elements such as support and resistance or trend lines to line up with our key Fibonacci level, this time what we've got is an example of price itself, so the candlesticks itself, giving us an indication of a reversal. And of course you can combine these elements. So if you identify a key structural support and resistance level lining up with a key Fibonacci level, you could then also wait for the presence of a reversal candle before you take the trade. Maria asks, how do you choose the bottom and the top? So really it's just a case of tracking the market forward, Maria, as you go along. So you can see that the market moves in this sort of natural ebb and flow of impulsive moves and corrective moves. And so it's really just a case of using a bit of common sense when you're tracking the market and looking to stay to the bigger swings. So from the top to the bottom here is clearly a swing in price. And so as price starts to correct against that, if we were then to map this move higher, we'd start from the low here and move up to this high. That would be a swing, and then we'd have another swing here. So it's really just a case of tracking the market and trying to stick to these major turning points and not getting caught up in little sort of moves like this. So if it doesn't jump off the screen at you, you're probably not looking at the right swing. That's how best I would advise to track the market. And really it's just a question of putting in some time practicing tracking the swings. And you might get a few wrong to start off with, but as you practice more, you'll pick it up very easily, and it just starts to jump off the screen at you. So that's looking for price action confirmation then. And then another fantastic way, and this is really one of the most strategic and probably quite effective ways to identify confluence at a level, is to actually identify confluence between Fibonacci levels themselves. Okay, so far we've looked at identifying confluence between Fibonacci levels and technical elements, between Fibonacci levels and price action itself. However, we can actually look for confluence between different Fibonacci levels. And the way in which we do this is to highlight an initial swing and identify a Fibonacci level. And actually, Maria, that's a nice, well-timed question, because we're actually going to be talking about swings in the market now and how you can use these different market swings to identify Fibonacci levels. So yeah, when we're looking to identify Fibonacci confluence between different Fibonacci levels, what we're looking to do is measure different price swings and see if these Fibonacci levels line up. So let's take a look at an example then, and I'll walk you through that. Okay, so you can see here we have this price swing, and we've measured from the high to the low, so we've got a bearish price swing. You can see the market is moving down highs to lows. So we're looking at this most recent swing from our high to our low, and as price retraces higher, we've got these key Fibonacci levels that we look to monitor. Okay, now in terms of looking to pick which levels to trade at, as well as just looking for confluence with different technical elements, as we discussed just then, we can also look to identify confluence between different Fibonacci levels. And so the way we do that is by measuring different price swings. So we can take this initial price swing, and then we can also measure the overall move, so from the very high to the very low of this move. And now if we do that, if we apply our Fibonacci retracement tool to that swing, you can see that the 38.2% retracement of that much larger move lines up really nicely with the 61.8% retracement of that most recent move. So this is an example of identifying confluence between different Fibonacci levels. Now the reason why this works so well is because we know that these Fibonacci retracement levels tend to be powerful turning points. But what we're looking for is a reason to decide to trade at a certain level. And so if different swings, if the measurement of different swings, if we have key Fibonacci levels lining up, then this means that that specific level is a much more powerful level in the market. Okay, so this might look complicated. We have a lot of lines on the charts and it might look a little bit messy, but remember, the indicators are automatically drawing these lines onto the charts for you. So all you have to do is pick the swings to measure, and then you're simply looking for areas where these different swings line up. Okay, so that's all you're doing. You're just looking for areas where these different swings line up. So this is another really fantastic way to highlight confluence in the market, and it's a method that a lot of Fibonacci traders rely on, and it's fantastic because you can use it on all time frames and you can measure very different levels of swings, and you're simply looking to identify areas where these different swing points line up, where these different Fibonacci levels line up, to increase your conviction about trading at a certain level. So here we've looked at an example then of where we can identify Fibonacci retracement levels lining up. However, just as we can identify confluence between retracement levels, what we can actually do, and this starts to move into more advanced Fibonacci analysis and trading, is look to highlight confluence between Fibonacci extension levels and retracement levels. Okay, so we can actually combine the two different forms of Fibonacci analysis to identify potential trade locations. So let's take a look at an example of this. Okay, so you can see here that we've measured our bearish price move. Okay, price started here, sold off, we got our reaction higher, we sold off. So this is the last swing that we're looking at. Imagine that price is at this point here. So we've put in our bearish retracement, we've got our key levels on. You can see price trades up to the 50% and sells off, but it doesn't break the low. Okay, so we don't get a trend continuation move. Price then trades back up and trades to the 61.8% retracement level. So as price trades up to that 61.8% retracement level, you can see we get another reversal lower. Price sells off down to this level. However, once again, we don't break the low, and in fact, we reverse and trade higher once again. So when price has put in this type of structure, so we've got our initial move, we've got our corrective move, our retracement, price has started to move lower, but it hasn't broken. So at the point that price starts to trade higher again, and we've got that sort of zigzag shape, so it's sort of like a half of the letter W, if you will, what we can do to identify another potential reversal point is simply to identify an extension level. And to find our extension level, all we're looking to do is apply our extension tool from this low to this leg. Anthony, this isn't actually a H4 chart, this is a H1 chart. You can use these Fibonacci levels on all sorts of time frames, daily, H1, H4, whatever you like. The only thing to remember is that, of course, the moves will be much shorter term the lower down you go, and obviously take a lot longer to play out the higher up you go. Okay, so going back to how we apply the extension tool then, remember, because this time we're looking to track, to project moves above the current swing, we measure from the low to the high, and then this plots on our extension, okay? And look, you can see here that the 127% extension of that initial corrective move lines up pretty much perfectly with the 78.6% retracement level of that initial move. Okay, so again, this might seem quite complicated and the charts look quite messy, but if you're struggling to follow along, just make sure that you go back over the video. It's a very simple process. All we're doing is identifying our retracement levels, and then once that retracement fails to break properly and price starts to turn higher again, we simply apply an extension tool to that initial corrective leg, and you can see that the price is projected, the levels projected above price rather, you can see where they line up. And so price trades up to where we have confluence between the 127% extension and the 161 extension, and that's where we ultimately get our reversal from. So this is a really fantastic way to identify these potential turning points in the market. And the beauty here is that we're combining retracement and extension, so we're being more strategic, a bit more advanced in how we use our Fibonacci analysis. And as I mentioned earlier, the beauty of using these Fibonacci levels is that they really do help you identify quite precise and unique turning points in the market. Because again, if you weren't using Fibonacci tools, it would be a very, very low likelihood that you would identify this zone as being a potential turning point. Okay, you might identify this high, you might think price is going to trade up, form a double top and sell off. But, it's a very low likelihood that you would identify this specific zone as being a potential turning point because there really isn't anything there. So it's the confluence between this extension level and this retracement level that gives us the conviction to go ahead and place a trade here. Okay, guys, well, I hope that you enjoyed that session. That was a really dense session again, as always. We covered quite a lot. And it's always really interesting to go back over these different elements. And like I say, Fibonacci analysis, I find, is one of the most interesting areas of Forex technical trading, simply because of the precision with which it highlights these levels. And again, the fact that these areas are so unique. So I hope that you've all enjoyed that session. Are there any questions I can answer just before we wrap this up? Great. Okay. Well, look, I'm really pleased that you've all enjoyed that session and found the content useful. And I hope you're looking forward to getting on the charts and trying out your Fibonacci retracements and extensions. And I look forward to catching up with you all next time. Okay. Take care, everyone. Thanks a lot.